They're trying to reach what's called artificial general intelligence. And it's a bit of an arms race at the moment, and they view the attainment of AGI as so important that if one of their competitors were to reach that before them, then it's a bit of a problem. It's almost existential.
Your latest report shows that in the first half of 2025, the amount of money essentially spent on AI added more to US GDP growth than the US consumer. I mean, the amount of money in this sector is just extraordinary.
Yeah, so these hyperscalers, whether that's Meta or Google, they're spending hundreds of billions on CapEx, and a lot of that is going towards AI-related spend. And really, for a lot of these players, they are spending very aggressively because they're trying to reach what's called artificial general intelligence. And it's a bit of an arms race at the moment, and they view the attainment of AGI as so important that if one of their competitors were to reach that before them, then it's a bit of a problem. It's almost existential. So really, we're just seeing the CapEx budgets go one way, and that's up.
Well, hundreds of billions of dollars have been bet on future earnings, and I suspect that has to do with general artificial intelligence. But have you seen any signs that these earnings are materialising?
Bit of a mixed bag. So if I was to focus on, say, Meta, they can actually use their AI investments to improve their core business, and whether that's their recommendation algorithm to users. So if you're scrolling Instagram, you're going to get more relevant content, which increases the engagement time, and they can monetize that via ads. So they actually have seen a direct improvement in their core business. Whereas others, it's a little more tenuous in that some of those revenues are yet to come, and whether that materializes or not is a bit of an open question.
I mean, one that stood out to me in your report was OpenAI's ChatGPT. You used an example that shows of its 800 million users worldwide, only 5% or 40 million are paid.
Yes, exactly, which is pretty daunting when Sam Altman has publicly said that OpenAI wants to spend $1.4 trillion to spin up 30 gigawatts of compute. These are enormous numbers, and to try and justify that sort of spend, they really need to move to an advertising-based model. So whether they can do that, again, it's difficult to know, but from a standing start, I think it's very difficult to build an advertising business. And you can just look at Twitter, Snap, Pinterest, which have been around for a while, and they've still really struggled to materially scale up those businesses. And if you were to look at Meta and Google, yes, they have scaled ad businesses, but they've been doing this for decades.
And they have underlying businesses aside from just the AI component.
Yeah, exactly. They have surface area, whether that's Instagram, Facebook, where you can put ads. And it's not to say that ChatGPT can't monetize by ads, but I think it's more so a question of can they monetize to a level that would justify the enormous amounts of money that they're spending at this stage.
And of course, OpenAI isn't listed yet, but when we're looking at the amount of money that's being spent, is there leverage in the system, or is this all cash at the moment?
Well, I'll put OpenAI to the side. That's right now sort of venture-backed, and as opposed to the hyperscalers that are publicly listed, they're funding this AI spend mostly through operating cash flow. And so what you can if you run some rough numbers, you can say that if they were to spend all of their operating cash flow, then there's still 50% upside relative to what sell-side brokers are saying that these hyperscalers are going to spend. And if they did move to 1x leverage, well, then it moves to 3x upside relative to what consensus is expecting them to spend on CapEx. So what that kind of suggests is that there's no real funding bottleneck for this spend. So it could go on for a while longer.
Could we reach a point where these valuations come crashing down from the fairly lofty levels they're at now, though? Sure,
yeah. It's always difficult to tell. Whether that's tomorrow, whether that's in 2 years' time, making those sorts of prognostications is always going to be challenging. But there are pockets in the AI complex that are so stretched that the maths, the numbers that these businesses are likely to produce, there's almost no hope that they're going to get to a level where they can justify those valuations. So this could be in the neo cloud space, some of the nuclear players that are powering these data centers. They're story stocks. But then there are parts of the AI space where if there is some longevity to the spend of these hyperscalers, well, maybe the valuations are reasonable and there's upside in some of those numbers.
So we talk a lot about an AI bubble and it bursting. How likely is it and how would it play out?
Well, it's difficult to say, but what I would say is that if you look at when ChatGPT was introduced, November 2022, if you look since then, 3/4 of the S&P 500's return have been driven by AI-related stocks. 80% of the earnings growth, 90% of the CapEx growth. So what that means is that from November 2022 to now, the S&P 500 has compounded at 19% per annum, which is phenomenal. But if you take out those AI winners, it's compounded at just 5%. So we're at a point where the rally in the market has become increasingly narrow and potentially increasingly risky, because does that AI bubble pop? I mean, it's anyone's guess. That's the trillion-dollar question. I do think it is possible if we got to a point where those hyperscalers felt they weren't getting an appropriate return on their spend, that's something that could derail things, or funding became an issue, which is still a while away.
We heard from Goldman Sachs and Morgan Stanley in the last 48 hours or so saying that they could see an easy sort of 10% to 20% correction over the next 1 to 2 years. Is that accurate?
In the AI stocks?
In the market in general.
Yeah, I mean, I think there's always going to be people calling for those sorts of corrections, and they might call, 20 of the last, 3 corrections. But I think that based on the hyperscalers, the returns they're getting, and the fact that funding isn't an issue, this could go on for a while.
George, your company invests really in the picks and shovel businesses that support AI. How are you approaching the sector?
Yeah, I'd say overall, our exposure to the AI theme is relatively small and contained. It's well within 10% of our overall portfolio. But one company that would be in that picks and shovels space is ASML. They're a Dutch company. They're a monopolist. And essentially, TSMC, they make the chips. ASML supplies the equipment to TSMC. And they're selling very advanced machinery, and they're the only game in town, really. So you have to buy from them. And we're buying that on the basis that it doesn't look expensive, and that a few years out, based on the orders that are likely from a lot of this CapEx that we spoke about, that people are just underestimating how many orders are going to come through for ASML.
George Hadjia, thank you so much.
Thank you.